Turning to the exchange rate, the U.S. Canada dollar, the forecast. I'm showing you 6 forecasts. I wonder why. Because we don't really know where it's going to go. You know, I'm the red line on this particular chart, and I think it's coming off. Given that we have weakness currently, more weakness coming in the first part of next year. Commodity price, oils was off this today. It's down. In fact, the Canadian dollar is down on 96.5 cents today. So I have it coming down. TD has it coming down a lot, as you can tell. They're down to 92 cents in the first quarter of next year. Others have it rising, such as CIBC, so we'll wait and see how that plays out. But longer term, the US dollar should continue to decline relative to the Canadian dollar. Every now and then it's going to show surges, and sometimes that's only due to crisis events. Look what happened during the financial crisis. Well, the US dollar gained a lot of ground. The Canadian dollar even fell below 80 cents. And even during this past few months, when you have the crisis in Europe, what happens? Investors tend to go to U.S. financial assets, and that means end up buying government bonds or the like, and bidding up the value of the U.S. dollar. So, in bad times, the U.S. dollar can benefit. It's still the #1 currency in the world, and there's nothing on the horizon to change that anytime soon. So, just quickly turning to BC, population growth numbers. These are on a quarterly basis have actually fallen off. So we have fewer people coming into the province now. The interprovincial migration flows are turning negative, so the green line is now below 0. And that has to do with Alberta. Alberta is now generating a lot more jobs than BC. Their job growth this year is about 3.5%, and BC, less than 1. Big difference. So previously, when the recession hit in 2008, 2009, people left Alberta, and actually we had a net inflow from Alberta to BC. Now it's reversed, and that's likely will remain the case for quite some time. 7%. The unemployment rate is a bit low. I think it's going to rise a little bit. These numbers tend to bounce around a lot because the sample size that StatsCan uses. Turning to some Vancouver and rest of BC, most of the job growth has been in Lower Mainland. This is the Vancouver metro area. The rest of BC, you can see that it's kind of slid lower, so not a good sign. It's been like that ever since the recession hit. And of course, the economic makeup or base of Metro Vancouver is quite different than the rest of BC. And the recession that did hit us was all through exports. And of course, that means forestry, mining, gas, and that kind of thing. And there's been some turnaround in mining, but not in forestry per se. So not a good state of the economy outside of Lower Mainland. Exports. These are merchandise exports for BC: forestry, mining, gas, agricultural products. So we had a big increase in September, mainly due to mining products. That'll probably come off in October. But not a bad performance, not great, but certainly heading in the right direction. Tourism, another important export for us. Not much has happened since the spike. I don't have to tell you what that was about. Okay, so these are mostly Americans, 80% Americans. We are seeing growth from the Asian economies, China in particular, because Canada now has approved destination status of about a year ago. So there will be more and more of those tourists coming. Housing sales, these are monthly numbers. The yellow line is you can see sales are kind of leveled out here. The new listings coming on, these are from MLS. Supply coming on, it's also kind of stabilized. And typically listings follow sales. Sales go up, listings go up, sales go down, listings go down. So we're at kind of moderate volume levels here. Nothing really to write home about. The November number I expect to be maybe even a bit up over October. So it's hanging in there, it's holding up reasonably well. Turning to housing prices, just quickly. You can see this is the average sales price as reported by the real estate boards in BC. Big run-up at the end of 2010 and into early 2011. You can see how the price has now slid lower in the past several months. Well, that's not really the case either. These numbers are not your best measure of housing prices. In fact, if you want to follow housing prices, you should follow the Housing Price Index. And this is produced by the Real Estate Board of Greater Vancouver. And unfortunately, it's only available for the Lower Mainland. That's the Vancouver and the Fraser Valley boards as a whole. So I just want you to compare how that index performs relative to the average sales price for the Lower Mainland. Now, in a broad sweep of market movement, they do track the same, right? They move in the same directions in general, but when it comes to particular short periods of time, a few months or a month here and there can be differences. So that's the one you want to watch. But prices have leveled out. They're not rising anymore, even by that measure. And I do expect to see further easing in housing prices in the coming month. Not a drop, but more easing coming. There's a lot of supply in the market, and that'll mean some price weakness. Just quickly turning to construction, these are numbers from StatsCan, non-residential building construction. Private sector means the commercial industrial as defined by StatsCan, and then public is government institutional, the public buildings. And these are quarterly numbers, and both in current dollars and then adjusted for building cost inflation or price increases. The public side, you can see it's at a fairly high level, but that won't be lasting too much longer, right? At some point, that will be tailing off given the end of the stimulus spending. On the private side, there will be some gains. There are a number of projects coming through. In fact, that right across the street will at some point be a new office tower. Turning to my forecast quickly, these are my sort of overall summary numbers for BC for the next few years. So I do see some had a moderate, weak, kind of growth for 11, for 12, 13, nothing to write home about. Then I see some improvement again in 14, 15. Unemployment rate to begin to come down as well. Turning to your industry, I do have some numbers on industrial building production or construction spending. Sorry, and these are from our economic model for the BC economy, and these are the historical numbers from StatsCan, and this is expressed in 2002 dollars. Okay, so it strips out cost inflation, wage inflation, that kind of thing. And so I do expect to see some substantial gains in the industrial building category. There are a number of major projects on the works, mining, utilities, and the like, I think will come through over time. And that's what I have building in to the industrial buildings. On the commercial side, I do see some gains coming up. Again, that's an example across the street, and there'll be some others coming along. The office market, vacancy rate is coming down. The retail side will be weak. It'll be more spotty when it comes to retail type of related construction. Turning to government, or the public sector construction, these are buildings, so there's no engineering projects in here, no roads, no pipelines, no highway, nothing like that, strictly buildings. And here I do see it hitting a high and then coming off for a few years, given government deficits are our government in BC is quite deficit conscious, and capital spending will not be rising by much. Whatever they have committed will certainly go through, and then it'll tail off. And same with the federal government as well. Turning to residential, housing starts mainly in here. So I see kind of a treading water range bound for this year, next year. 2010 was a nice rebound out of the recession, but we haven't seen a lot of increases since then. So I see that kind of leveling out, plus or minus. Just think of it that way. And then I see some later gains. After all, we have the change to the PST coming, which has quite a negative impact. HST has quite a negative impact on new construction, particularly anything over 525,000. Transition rules haven't been announced, so I think builders and home buyers are going to be kind of on the hold for a bit until we get some better sense of that. And it won't be till after 2012 I think we'll see some better housing construction numbers. But not a bad performance. It's not going to tank in my view. No housing recession is likely, but it's certainly not going to be a boom either. So I think that's basically my forecast, and here's my sort of point form summary, which I don't need to repeat necessarily.